This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview.
Joining us today is Paul Welch, the CEO of Nostra, Terra Oil and Gas. Thank you very much, Paul, for taking the time just in this last week before we sort of break for Christmas. How are you doing?
I'm doing really well. Not as well as you. It looks like you're in quite a festive mood there. So,
well, I'm trying. Yeah, indeed. But I wonder if we can perhaps just talk a bit of a summary of the year. But first of all, I mean, just for people who are perhaps not familiar with Nostra Terra and of course the new management, the new strategy, just give us a bit of some of the key facts.
Okay, so Nostra Terra is an E&P. We're a producer. Our assets are primarily in Texas in the U.S. We have one main license called Pine Mills, and in 2024, I think important is that we had a lot of significant changes. So we had a change in management. There was a completely new management team. We've increased our production by about 20%. We've cut our costs by 25%. We decreased our lifting costs by almost 50%, and we've increased our profitability by a significant amount. So it was a really significant change in 2024, and now the company is profitable. So I came on board about 6 months ago, and the goal there was to really improve the financial performance of the company, and commensurate with that was the production performance. And so we've done that today.
Good. And how are you feeling then about your 6 months in office, so to speak? Then.
I feel pretty good. We've done a number of things. So we've done two kind of significant for us capital raises, and all that money has gone straight into the ground. So we've done a number of workovers, primarily in Pine Mills. We've raised the production in the Pine Mills field from when I got there, which was 50 barrels a day, to 80, and it'll go a little bit above that here in the next couple of days. So that was significantly important. But there's still, a lot of work to do. So I haven't sold, I sold some assets when I came on board. So I sold some of the West Texas stuff. I have some other stuff in West Texas I need to sell. I haven't done that yet. But I think more importantly, we have a lot of running room in Pine Mills. And the more that we, kind of dig into it, the more exciting the opportunities that we see. So, we've done 8 workovers. We have 3 more to go. We have a rig in the field at the moment, so we're on our 9th well at the moment. But beyond that, we have 3D that covers the entire field. We've done some technical work. We drilled 2 years ago with our partner. We drilled these wells called the Falk wells that came in at 140 barrels a day, whereas the average Pine Mill wells produces about between 6 and 10. And the field was discovered in 1954, and there were 40 or 50 wells drilled in it. And so, we have 5 different pay zones. And so it's kind of a matter of just working through individual wells and looking for kind of undrained fault blocks. And so there's a lot of technical work to do. And we're undergoing that at the moment. So we think in 2025, the work that we put in 2024 will start to pay off. So we'll complete some new zones, potentially drill some new wells. So there's a lot in front of us, and again, it's all very profitable now because we've cut our costs so much. There's probably still a little cost savings that we can wring out of it, but things are certainly headed in the right direction compared to when I came on board.
Good. Okay. And of course, as you mentioned, you raised significant capital. I think 500,000 just recently as well. So that funds the current workover program. And I think the objective there was to get to an extra 50 barrels of oil per day. So you'd be looking sort of total around 125 or something over the course of next year.
Yeah. We expect to get there. So there have been 2 workover programs. The first one was focused on essentially one part of the field up in the north that was under water floods and hadn't been put on water flood for 2 years. So we corrected that. We started to re-inject water in the field. And that will start in the northern part of the field, and that will start to pay dividends essentially now into the first quarter. So from that, we're expecting to see between 15 and 30 barrels a day incremental. And then in the second capital raise, we've now, we're starting that process, and we expect to get another between 30 and 50 barrels a day from that. So, between the two, we're looking at another between, say, 50 to 60 barrels a day in the Pine Mills field itself. Now, when I came on board, the field itself was only making 50 barrels a day. So, we're talking about a substantial increase. And the nice thing about it is that once we hit, we have a certain fixed overhead. And then after we surpass that, make that essentially that payment, we pay for all those costs, everything else is profitable. So, our average net back for a Pine Mills barrel at current oil prices is $45. So, the profitability of the field, ratchets up significantly. As we said when we did the last raise, when these, new barrels come online, our production or our cash flow will increase by a factor of 5. So it's really a substantial move. Now, again, this is a small numbers. We're talking 100, 150 barrels a day, but it's because it's sunk costs. We're not drilling new wells. Everything is essentially in place. It's a very, very profitable opportunity for us.
Good. So just looking into next year then, and looking at perhaps the next, I don't know how you want to break it down, whether by first quarter, second quarter, or H1, H2, but what can we look forward to? I guess, of course, the completion of the workover program. Could we possibly see the drilling of some new wells?
Yeah, we can possibly. So if we just kind of look across the year, I think in the first quarter, what we'll see is the response from the waterflood in the north. We'll start to see that, and then we'll finish up the second part of the workover program. So that should be finished in the first quarter. Then, in the first half of the year, we should get the majority of the technical work done. So based upon that, we'll see a number of what we expect are recompletion opportunities, and then new well opportunities. And so it's the new well opportunities that really, kind of significantly move the needle. Let's say a recompleted well will come in. A good well will come in at 10 to 12 barrels a day, maybe 15. A newly drilled well in an undrained fault block like the Fox come in at 140 barrels a day. So you can see there's a significant difference there. And so where we expect to be in this by mid-year is in a position to, drill some new locations. Now, in some of the field, like in the Falk area, we need a partner, but down in that area, they are our partner. They need to agree. In that area, we've identified 2 locations already. So we can certainly drill one of those 2 in 2025. And then, as I've said in the past, we have 2 other areas in the field that we think have Falk-like potential. And so we'll be in a position to drill, both or one of those in 2025 also. Now, these are, new drill wells. They cost about $1 million each. And so we'll probably look for partners for all those opportunities because it's just too much capital at the moment for us. But, that's what we can see. So it's a combination of completion of the workover program, identifying those behind pipe opportunities that we think exist, and then looking for new drill locations. Now, the new drill locations are anywhere between 200 and 300 barrels recoverable, 300,000 barrels recoverable. So it's a significant step change. Mm-hmm. And then the other part of the story is that there are some M&A opportunities out there in the general vicinity of where we're working, we think. We have a good base now. And so, we think there are some, let's call them bolt-on acquisitions that we could add that would significantly, improve our profitability, allow us to utilize all the facilities we have. So we see the whole gamut. We see, behind pipe, new drill in the field, and then bolt-on acquisition. So we think that 2025 is going to be a significant profitable year for us, unless the oil price drops or something crazy happens. Who knows? But given the way we're forecasting at the moment, we think 2025 is going to be one of our best years.
Good. That's good to hear. And is that what you'd like to sort of say to shareholders then, what they can sort of, why they should consider, looking at Nostra Terra? I mean, of course, we've had Trump as well, that whole drill, baby, drill mantra he likes to talk about there,
Yeah. Well, okay. So there's 2 things there. Let's talk about Trump second. Firstly, first of all, I want to thank our shareholders because our shareholders have, been really patient. A lot of shareholders have been in the stock for a long time and haven't seen much return. We've done 2 fundraises at, unfortunately, significant discounts. And I think that, the time for that is over. So now we need to start delivering some shareholder value, increase the share price from here. That's what our target is. And again, we're going to do that through increased profitability and all the other things I said. With regard to, what we can expect from Trump. He said, drill by drill. So he's going to make permitting easy, more opportunities to drill, which is definitely a good thing. At the moment, we're in East Texas primarily, where we're some parts of West Texas. It's oil country. Getting permits there and things done like that is never been a problem. I don't think it'll ever be a problem. It may be a little bit easier with Trump, but I don't think it'll matter that much. I think where we'll see if there's going to be, when you drill a bunch of wells, what you can expect, I assume, is increased production, which would potentially lower the price, which is not necessarily great for the business. But where I think we're going to see some, hopefully, improvement in what Trump is going to do is that, there's a moratorium on exporting gas in the U.S. And so that kind of limits, what people can do. I think what he'll do is essentially remove that cap and start to allow for export of more hydrocarbons, and that'll give the gas market a little bit of a lift, because gas prices in the U.S. are, probably a half to a third of what they are in Europe at the moment. And so I think that will be a benefit. Now, we're a 100% oil-based company. If it looks like the gas price is going to move, potentially we could get involved there. So, so there is some benefit, but let's wait and see. I think, with Trump, there's always something surprising. And, I think that's true for any politician, but Trump has proved himself to be quite surprising. So we'll see. It's definitely not a bad thing. But like I said, where we operate in Texas, getting permits, getting things done is very, very simple, very easy, very straightforward. It's been an oil field country for, 100 years. So
indeed,
it'll continue.
Good. Well, thank you very much for your time. I look forward to catching up early in Q1 to see how that workover program is indeed going on. But for now, Paul Welch, the CEO of Nostra, Terra Oil and Gas, thank you for your time.
Yeah, thanks very much for having me on. And again, Merry Christmas.
Indeed.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.